Welcome to episode 31 of the Wealth Amplifier Podcast. Pat, Happy New Year. Aaron, Happy New Year.
Thanks.
Happy New Year, guys. First one of 2025.
Yes, welcome to 2025. So I guess in that spirit, we did our predictions episode at the end of 2024, and we already have some predictions that are probably wrong, but we'll do the post-mortem on that in December. But this is sort of our year ahead, look ahead episode where we dive into some good habits for people on the financial front. And, you know, beginning of year is a good time to reset that. So, Pat, you want to kick us off with any thoughts about a year ahead financial checklist or, you know, types of things that people should be doing at the beginning of the year?
Yeah, for sure. I'm happy to. So, when you start out a new year, you know, obviously folks are concerned about making changes and resolutions and all that kind of fun stuff. But I think generally speaking, people want to start a new year on the right foot. So in the spirit of that, we certainly have some topics I think we all speak to clients about each year when the clock turns to a brand new year. And one of those I'll just kick off with is reviewing what was supposed to occur last year, as basic as that. So we all have for clients what we reference a lot of times, different words for it, but cash flow plans that look at, you know, where they are relative to retirement, how much they should be saving. If they're in retirement, how much they should be withdrawing, how much they should be spending. Those are all key figures that they shouldn't just be numbers on paper. So if last year you're retired and you were supposed to withdraw $100,000 from your accounts, was that the case? Did you underspend? Did you overspend? If it's the latter, you know, maybe it's time to course correct a little bit so that you don't run out of money in 15 years. I think those are maybe that one specifically is a big overlooked one where if you're not checking in on your plan, where you at? So that would be one of the first things. And that is often one of the first things we're doing in this first couple months of the year with clients is reconsulting those cash flow plans, seeing where we stood from last year and also what's likely to change for this year. You guys want to add anything to that?
Go ahead, Aaron.
You know, timely, unfortunately, but with everything going on in California with the wildfires, which is terrible. You know, it's not, when we talk financial planning, it's not just your investable assets. You know, it's the protection you have. Let's review things that haven't been reviewed in a while. So how about those insurance policies, the umbrella policies? And a lot of times when we're talking insurance, it might be life insurance, long-term care, but these other components are really important too. So I don't think home insurance is looked at very frequently, maybe not frequently enough. But hey, in times like these, it makes you think. So I certainly am.
Yeah.
I think that's right. I think also, Pat, back to your taking inventory of the prior year thing, I think there's a balance there because on one hand, you want to review, see how you did, you know, pat yourself on the back if you succeeded and then maybe reflect and figure out why if you did not succeed at reaching your goals. But there's only so much time you want to spend looking backward.
Yep.
I think almost like a sports event, you know, when you get eliminated from the playoffs, remember how it feels and then get to training camp and you know, and start for the next year. So I do think you know, you want to take that inventory, but then you really want to pivot to, well, nothing I can do about 2024 now. So what do I do for this year?
Yeah, I agree. I mean, talking about some of the behavioral notions that we speak to clients about is review the stuff that is critically important. And in my opinion, it's the stuff we just mentioned. What's less important, honestly, is how you did from an investment standpoint. Like a lot of our plans get run at 6-7%. And we definitely hit that for most people, I would imagine, whether they were, you know, if you were invested in the stock market last year, probably did okay. So, you know, move on. To Matt's point, let's look ahead to the things we can control. A couple other things on that whole vein that I think are just important to review as the year gets going is asking yourself that question. Like you said, Matt, like what can I change? What should I look forward to? Is changes to income. Big one, right? So you have a change to income. It's going up, down, sideways. That can often spur, especially if you have a good financial team around you, the types of planning you should be considering. So I'll throw one to you guys. Let's say first year retired for me. Income was high last year. This year, going to be different. I'm not going to have as much income. Beginning of the year, what kind of things would you guys want to put on my radar as the year gets going?
So you're saying hypothetically, if you're sitting there in a lower tax year.
Right.
So I think one you've heard often is Roth conversion. That's a hot topic. Lower income year, less taxable income, lower tax rate on that conversion. So it becomes more digestible than paying 30 some percent. Maybe you're now at 18 or 22, what have you.
Yep.
Yeah. And I think, another part of the income picture is the capital gains tax picture. And to your point, Pat, about pretty strong markets last year and the year before, pretty weak the year before that. But chances are a lot of people have some pretty significant unrealized capital gains right now. Is now a decent time to realize those? Are there other alternatives and ways to defer taxes and so on? So I think taxes become front of mind as well.
This is rare that it happens for those that are generally our clients, but it can happen. Even those in the high net worth, income kind of frame, if most of their assets are retirement accounts and they do retire and not taking Social Security yet, not on a pension, but there is such thing as a 0% capital gains rate.
Yep.
And it's tough to stay under those limits if you have taxable accounts because you've got dividends and interest and other things that are paying out to you. But that's a real target to take advantage of in a year or two. And even if it's not for you, just because we're on the topic of 0% tax rates, how about your kids? Your kids that are in college, you've given them some money over the years, they've got a bunch of gains in their portfolio and they're still, they've got an hourly job or they're in college, whatever it is, and they're really low income, take those gains because they're not going to pay any tax on it.
Yeah. Or you wanted to gift your kid something and you were going to gift them some money, maybe gift him or her a appreciated stock, let them sell it. Nobody's paying the capital gains as long as their income's below a certain point. I want to stay on capital gains for a second. That's an awesome one, Aaron. Obviously doesn't get talked about enough. But yeah, so we had this tax call that we hosted in December. And I think in general, a lot of our client conversations the last 3 months of 2024 were coming off the back of a 2-year brand new bull market, if you will. A lot of capital gains in people's portfolios, or unrealized gains, I should say, that we're not taking. We're looking for losses in the last half of the year to reduce that tax bill. And now it's kind of the inverse. And let me ask you guys, if it's January, why might I be better off taking my capital gain? Number one, for investment reasons, to your point, Matt, you just take some profits, reallocate, that kind of thing. But why in January might it just be a good idea to take gains as opposed to December at the end of the year?
I guess at its core, if your goal is to, all else equal, offset gains and losses, if you take gains now, you have 11 months to find some losses. You take gains in December, you might have 11 days to find it, and so on.
Yeah,
that's right.
That's exactly right. It's a line I use often. And I think there's some behavioral benefit. It's a difference of, if you take a huge taxable transaction in December, you only have 3 or 4 months before that bill is due, right? You got to file your taxes. If you're giving yourself a big taxable event, you don't want to forget about it but if you're doing it in January, you have 13, 14 months until you're going to have to pay your taxes next year outside of quarterlies and stuff like that. So you're giving yourself some more time to plan for it too. So yeah, just a good topic, I think, especially with the market and the environment that we're in today.
And I wanted to shift gears, unless you had any other major checklist items at the beginning of the year.
I think the only other big one, or two big ones, is if you had earned income, you should try to make an IRA contribution. It's just a matter of what, which we won't spend a bunch of time on right now. So that's one. And then two, are you turning a milestone birthday? So we talk to clients a lot about it, but the milestone years, people are familiar with them. You turn 50, you have catch-up contributions you can make to retirement accounts. There's a new tax law that Phil on our team is coming out with a video on this week. If your age is between the ages of 61 and 63, very odd and kind of random numbers, you can make another additional catch-up contribution to retirement accounts. But there's these other ones. Are you Social Security eligible? Are you Medicare eligible? Is it your first year of required minimum distributions? Those are all, miles. Am I turning a milestone birth year? What does that mean from a tax financial planning standpoint?
I'll give one more This is sort of like a New Year's resolution, try to do something. The one I used last year was have that savings target, one-way street, money's going in, not coming out, and sort of gamify it. I try to do it for myself. All right, I'm going to save $1 this year. Like, did I do it? Did I not? Okay, so that was last year. Still great idea. The other one, and I think I referenced this on our first ever podcast or somewhere near the beginning, but I saw an article way back about the less often you look at your portfolio, the better it'll do, or the more it'll be up.
Yeah.
I'm like, what are you talking about? But then they were talking about, well, if, to the extreme, if you look at your account now and you look 5 seconds later, you got a 50-50 chance of being higher or lower. But if you look today and you look again in 100 years, most likely it's going to be higher. So to that point, I'm not telling you if you're investing you're on your own and you're not allocated properly, just to take your hands off the wheels and not look at your portfolio. But as long as you're allocated properly, somebody is there by your side, an advisor that is paying attention. Don't look at your account at some interval. If you're a daily looker, push it out to a week. If you're a weekly, make it a month. If you're monthly, make it a quarter. Something. It'll alleviate stress. It'll alleviate the risk of running into a bad decision, an emotional decision. So I think that would be a good one. If you are somebody who frequently looks, try to stretch it out.
Yeah. Great one. One of my favorite studies to reference.
Which is a perfect segue, because what you're really talking about there, Aaron, is using the power of inertia to your advantage. And that was another thing we wanted to talk about today, is that from a financial standpoint, at the beginning of the year, there are both really positive and negative components to the concept of inertia. And that's not just financial, that could be lifestyle as well. So I guess, Pat, around to you. Any thoughts on some of the positive inertia things that you can do just on autopilot?
Sure, yeah. One that comes to mind, and it's another study that I'll butcher without referencing the specifics and whatnot, but you guys may have heard this as well. So feel free to fill me in on anything I'm missing here. But it was the 80s that the 401k plan was initiated. It became sort of very normal in the course of private businesses in the U.S. where employees are saving money to an account as opposed to receiving a pension. So there were sort of lower rates of adoption and successes of 401ks for many years. And then there was, I'm going to butcher this study. I don't remember when this became normal and a default, but for most employers who offer a 401k plan nowadays, they have what's called an auto enrollment feature. And this is a perfect example of inertia in real life working to people's benefits. When people were given the option, hey, do you want to enroll in your 401k? People, even if they wanted to, they'd forget about it. They wouldn't do it. They'd procrastinate. Months would go by.
Years I'll do it later.
Yeah, I'll do it later. And years would go by, and they didn't save anything for retirement. Major contributor to retirement crisis we have in the U.S. And then nowadays, most companies, they made some law change that allows employers to do an auto enrollment. So I don't have to do anything, and money's just going to start going to my 401k. Now people are saving money. It's compounding. It's going. So that would be an example, a long-winded example of the reoccurring savings we talk about all the time. Set it up. Go through the pain for a minute to set up the reoccurring savings. Don't just say you're going to do it. Do it. And that is going to compound for you over time. And that is the same vein as all these other things. Like you wake up at the same time every day. You exercise or you eat the right food every day. Those things, they don't make a huge difference that day. They're going to make a huge difference over time. And I think that's why inertia is such a strong force. And if you guys want to add some more examples to that, good or bad.
I just piggyback on all of it. I think any good habit is hard to start. And you just got to do it, whether it's what I said of how frequently you look, the saving strategy, your philosophy on things. Everything you said is right and nothing really specific to add.
I'll just add one there that I think gets overlooked a little bit, and that is the topic of debt and then the interest on debt. During the financial crisis, there were all these funky types of mortgages. They make interest-only loans look traditional and conventional. There were negative amortization loans, all kinds of crazy stuff. But anyway, general concept is if you're sitting on debt, I don't care if it's credit card, mortgage, student loans, whatever. I'm going to say something really basic here, but I think gets lost. If you pay back more than the interest you owe, your principal balance will go down. And therefore, all else equal, in the future, you will owe less. And if you pay back less, your principal balance will go up. And therefore, all else equal in the future, you will own more. So I think getting that snowball rolling downhill as opposed to uphill is a pretty powerful thing that can save you a lot of money over the long term, no matter what wealth point you're at.
I hate to say like, oh, I'm the prime example and I do everything right, because I don't. But to that point that I made before, and to what Matt just said of gamifying, I want to save $1 this year. I do it on both sides. And then I do a combination of how much should I save in dollars and how much of my mortgage that I pay extra to, and that's my real savings number. I saved $1 over here, and I paid 20 cents down to the mortgage. Well, I saved $1.20. Or, in my mind, or whatever it is. So yeah, both sides, absolutely. And I think most people forget about that side, Matt.
Yeah.
I don't think work for a bank anymore. I mean, they used to tell us to talk about the debt side of the balance sheet all the time. I have no horse in the race, folks. So.
I think that's the overarching power of inertia, though, right? Is if you're not noticing that you have an enormous debt building up, it can feel like it's working against you, and it like brings you down emotionally. It can mess with your mental health, and you have to find a way to put that line in the sand, make that change, keep at it, build the inertia going the other way, right? Start moving the ball the other direction, which that like doing that first part is the hardest part, because you're working against that negative force already. So turning that around, debt, I think, is a perfect example of that. You got to change the tides, if you will, which is what New Year's is all about, right?
Moving forward.
Right. So speaking of which, let's personalize this a little bit. Any resolutions that either of you have for 2025?
I'm going to stay on did I talk about with you guys on the podcast AG1 that we all learned about?
I don't think you did on the podcast.
Yeah, but I remember you talking.
I've been watching you every morning fill the thing up.
So. That's right. So the green drink. So, Athletic Greens used to be called AG1, and there's 100 of these different powders you could drink and supplements with probiotics and multivitamins, whatever you take. They're all, I don't know if they're the same or not. But anyway, I want to stick with it. I'm 2 months in. Here's inertia. AG1, how they charge you, it's on a subscription model. So unless I go in and click stop, it's going to keep on coming. I'm going to keep on paying for it. If I'm paying for it, I'm going to drink it. So I want to see if in a year from now, I'm still on the train.
Nice. The new gasoline on American capitalism, subscription revenue, which is how everybody loves to make money nowadays. In terms of resolutions, no. I like to assess and add some goals each year. I haven't actually done that yet, even though we're in the second week of the new year. A couple I do have. I want to read more books. I've always been a reader, but last year, for whatever reason, it just felt like my 5-year average dipped a little bit in terms of books I consumed last year. So I'm trying to build that back up. I also promised myself I was going to get another certification last year. I did not do that. So my SEPA, I'm coming for it this year. I'd like to get that knocked out.
Which stands for?
Certified Exit Planning Advisor.
Okay.
I mean, you're part of the way there. You know what it stands for.
I know what it stands for. Yep. That's right. I can spell it. So we're getting there. But no, those are a couple just in general. No major resolutions. Just a couple goals to concentrate on for the year.
Well, I'll piggyback on Pat's. I'm just keeping a simple one. I find simple, quantifiable goals are easier to achieve. I want to read at least one book a month. It's I don't read enough. I used to read a lot. It goes in waves with me. Like there's some years I'll read a ton, and other years that I'm just sort of mindlessly watching TV during my downtime. There's nothing wrong with TV, but one book a month.
Do you have a lineup already for all 12? Or are you going to go as you sort of feel them out?
As I go. I'm about halfway done the January one, so I'm like right on pace. I got to pick it up a little bit.
Nice.
And then I don't know. I have some sort of in the queue, but I don't know what's up for February yet.
Nice.
So Aaron, new year, new hoagie. Any hoagie reviews that you want to share?
Yeah, this is a hoagie I've had many a time. Had it yesterday. And I normally wouldn't review a place like this, but because Blackstone thinks they're worth $8 billion. Jersey Mike's will get some attention from me as well. I only pay attention to the big guys, Right. So Jersey Mike's always been a favorite of mine, my family's. It's not your local shop, but they do a really good job. So yesterday I went and picked up for my kids and my wife and myself, and I butchered the order and blamed it on the guys but I got home. I was like, I got it all right. One wanted the cheese, wanted no cheese, one lettuce, one no lettuce, but I had the pickles, and I got home and I thought I did it perfectly, and everyone opened theirs up, and of course it was all wrong. So that was my doing, not Jersey Mike's fault. But I think they do a good job of making everything fresh, a lot of flavor. They call it the juice. It's the oil and vinegar, and they load it up, and their seasonings, the salt, the pepper, the oregano. They have a hot pepper relish that they even sell in containers on its own. We buy that and put it on our own sandwiches. So I don't think you can compare this to the local mom and pop shop. But if you're looking at it in a mass chain sort of view, and even not, I do like it. But just because it is the mass chain, I'll knock the score down a tad. But I give it an 8.2. Very happy with Jersey Mike's. I like it. If this was Jersey Bob's, I would have said 8.7. But just because Jersey Mike's, 8.2.
So that's like 1 point for every billion of their valuation. I mean,
that's right. They paid a little more. Yeah. They could have gotten up to the 9s. Exclusive, rare air up there.
Is that your highest of a chain? I think because you've done Primo. What other chains have you done?
Definitely.
Just Primo?
Probably.
You did Lee's, which is sort of a chain.
Local Philly.
Yeah.
I would do Jimmy John's, but they don't seem to exist around here.
Yeah, I haven't seen
anymore.
I feel like you see them less and less.
Yeah.
Let me ask you this, Aaron, on the topic of hoagie chains. Did you ever talk, especially one that's not around much anymore? Did you ever go to Quiznos growing up?
Yeah, for sure.
What was your thoughts on Quiznos?
I liked it. We went quite frequently, especially through college. We had one on campus. I liked it. I probably liked Jersey Mike's more, but Quiznos was the toasted ones.
Yes. Yeah, it sent it through that little toaster thing.
Yeah, we liked that.
Yeah, I was a huge fan of Quiznos growing up.
Yeah, I just remember their pickles. They had a little pickle bar over there.
Yeah, they did.
Yeah.
So I take it you guys are not big fans of Subway then?
No, I haven't been in years.
No.
I used to go quite frequently.
But I wasn't above it at a time, but
I don't think anybody. You go through phases. Definitely, there's a big college and after phase of Subway.
Yeah,
$4.99 sandwich. It's like
true.
Sure, why not?
Well, good New Year's resolution is keeping these episodes under 30 minutes because I find too many podcasts that I listen to are just like going on and on and on. Not that we're above that either. So let's get towards the conclusion. Anything you are reading, watching, any recommendations?
I got two. I have been watching the show Silo on Apple TV.
I've seen the ads.
It was recommended by a friend for many months now, and we never tried it. But Kara and I gave it a shot. I think we started over the holiday season, and I like it. You try new shows, and I feel like often I'm disappointed. Like I'll try one episode or two episodes, and I'm like, I fall off. Well, this one's got some staying power. It's on the second season now. Really liked it. It's based on a set of fiction books. Not sure if you guys are familiar with it, but it's basically like a dystopian society where the government controls everyone who lives in this silo. Like this post-apocalyptic war occurred, and now they live underground, and like the outside is like poisonous air, and people start questioning like, is it actually poisonous? Can we really not go outside? And it's sort of this interesting conspiratorial type of thing, which I know Matt knows that I like those. And then in the vein of reading more, I have started reading The Splendid and the Vile. Do you guys know that one?
Larson?
Yes. So all about the bombing of London during the World War II. It specifically focuses on Churchill as he became prime minister during that time, and sort of his charisma and morale to keep the city from like just giving up during a pretty hopeless time. So it's a page turner. It's very, that whole time period in Churchill are very interesting to me. So it's been very good. Would highly recommend so far.
Is it fiction, nonfiction?
Nonfiction. Yep, nonfiction.
Purely nonfiction. Okay.
It's an account of what was occurring during that time.
I mean, I know Churchill wasn't fiction. I just didn't know.
Yeah. Right. No. Historical nonfiction or whatever.
Yeah.
Historical. Yeah. No.
Talk about conspiracy theories.
Right.
Yeah.
Is Churchill real? Yes.
Yeah. No.
Matt, go ahead.
So, TV show, Aaron, you know this because I've been talking about it to you. Big fan of Landman. Just binge watched the first season with Billy Bob Thornton, Ali Larder, John Hamm, Demi Moore.
Taylor Kitsch, Tim Riggins.
He was in it?
I think, right? Is he not? Sorry, keep going. I don't mean to interrupt.
I mean, it feels like he should be because there's such a like Friday Night Lights type vibe to the show.
Yeah.
But I don't remember who his character was if he was in it.
Huh.
There are a lot of guys that look like him in it. But anyway, it was it's just a great like Texas show. And good acting, good drama, a little bit of comedy, a little bit of action. I highly recommend. I really enjoyed it.
Nice.
That's cool.
That's from Taylor Sheridan, right? The same guy who did
Yes.
like Yellowstone and all those. That's his new thing.
That's his new one, yeah.
Yeah, I want to check that out. And I thought Taylor Kitsch is in that other American Primeval. Or
Oh, okay.
like that.
Yeah.
I was confusing the two. Both of those are on my list.
Yeah, as I said, a lot of guys that look like him in this one, but I don't think he was in it.
Yeah.
And then I'll stick to the book thing too. Reading the book Tribe. Are you familiar with this one by Sebastian? I don't know if I'm going to say this right. Junger, Junger.
I actually do know. Yeah, I never read it, but I know what you're talking
It's
about.
been recommended to me for years, or not years, but a while that I should read this, and it's very good. It's just sort of all about people's happiness and satisfaction being highly correlated to being part of a group or a bigger purpose, and throughout various times in history. It's a pretty cool read, and it's a pretty short read. So.
Nice. I like that.
Cool. And I'm sure I referenced it to you guys off podcast, but Shoe Dog, the Phil Knight Nike memoir. I read that over the holiday break. I liked it. I got through it pretty quickly. I think I told you guys this as well, but for the audience, we've got 3 minutes to stay under 30 minutes. I'll say it quickly. I don't read a ton, but I knew Shoe Dogs was out there. I knew I like memoirs. I like sports. So I go to Barnes & Noble, and I don't know if I asked them for it. I said, hey, you can't find a book there. So, hey, can you help me find it? So you don't know if it's going to be 500 pages, tiny font, giant font, 20 pages, whatever. So they hand it to me, and very manageable. I said, ooh, this is great. And I start walking out, and I see it says Young Readers Edition. So, for 12 and 13-year-olds. Yeah. And I was thinking, if I went, we were going on vacation, if I was reading on the beach, my brother saw, like, what are you reading? And there were young readers. But I did debate on keeping it for a little while, but I didn't. I swapped it out for the real one, 350 some pages. It was great, though. I really liked it, from being a kid all the way up into Phil Knight's, whatever age he is now. Yeah. Great story. And it was all really before, Michael Jordan and the whole, it really took off after that. And I know the movie Air was really, I guess, tacked on to the end of the book. So I think I'll watch that next. But it was a good one.
Yeah, it's a good book. I like that one.
Yeah. I never read it. It's obviously famous. I saw Air. Fascinating guy, though.
Yep. Very cool.
All right. Well, look at us under the clock. Good episode, guys. Episode 31 for 2025 in the books. Have some good content coming your way this year. And thanks for listening.
Yeah, we'll have a good interview coming up next couple of weeks, too. Got that scheduled.
Oh, good. All right. Sounds good.
All right.
Thanks, everyone.
See you guys.
Bye.